Okay, let's get stuck straight in. I'm going to take you through the Vanguard UK website here and explain each of the different funds they have available to investors. As you can see on screen, there are 79 different options to choose from, and I know what it's like being a newer investor trying to figure things out back when I started. By the end of the video, you should be in a much better position to understand some of the terminologies they use, the difference between blended funds, equity and fixed income, as well as how to navigate and filter their offerings on the website. First up, let's start from the top. Vanguard has just updated their website, so it does look slightly differently from a lot of the other videos you might see from me or anyone else. I think they might be moving into the 21st century. Just watch this space. Once you open the website, vanguardinvestor.co.uk, you can head over to the What We Offer page and then select our full list of funds, and this is where you'll get taken on screen now. One of the first things we need to do is start to filter this list and break it down. On top here, we're given several options: ready-made portfolios, build my own portfolio, and all funds. Essentially, this first option is asking us what kind of investor we are and what we want. In the ready-made portfolios, this filters down to just 16 results, and you can see here, Vanguard offer what they call their life strategy funds and target retirement. What do they both mean? Let's have a look. It's not that complicated, don't worry. Remember that in basic terms, a fund in the investment world is just a collection of something, which could either be a group of companies or it could be a group of other funds too. The idea is that by investing into a fund, you don't have to worry about picking your own stocks and companies, and you let someone else do this part for you, which for a lot of people sounds very good. It's like calling a plumber when you've blocked the toilet rather than trying to figure out why it won't go down yourself. Managed funds basically let the experts do the work for you, so you can get on with your life and not have to worry too much about investing. Or flushing. Right, let's just break down these quickly then. The Life Strategy range is a single mutual fund that allows you as an investor to have one fund that lets you invest in most of the world. In theory, you would just invest into a fund like this all at once or every month as you get paid, and then that's you sorted for the next 20 years. It's well diversified because you won't be stuck with just investing in one industry or one part of the world, and you can also choose to include bonds as well, depending on the kind of level of risk you're willing to take and your own personal circumstances. If we just choose one and run through it, everything will make a lot more sense. I'll click on this one, you'll see the Life Strategy 80% fund. You'll see that the options are pretty simple. Basically, the percentage refers to how much the fund will be made up of equities versus bonds. Or in other words, how much will be invested into the stock market and companies. This 80% one therefore has 80% of its fund invested into companies and 20% will be invested into bonds. Remember, bonds are essentially just loans to governments or corporations that pay a fixed amount of interest back to you. You can get some dodgy ones, like if you're lending to that one friend who never pays you back, but generally if you stick to high quality ones like that are in here, you should be fine. First off the bat, there are two versions of each life strategy fund: income or accumulation. As the name suggests, if you want the money from dividend payments that companies inside this fund will pay, you can choose income. On the other hand, if you want that money to be reinvested and not paid to you in cash, then you would choose accumulation. This all depends on where you are in life. If you need the money or not, that one's up to you. Breaking it down further, we can see that we've got basic details like the price, the asset allocation, ongoing charges and risk. Pay attention to all of these. Remember that costs are one of the most important factors for investors over the long term. This cost is what will be removed from your investment value per year, but also factor in the cost of the account fee with Vanguard, which is 0.15%. That's paid in cash, either using direct debit or a debit card. If you want more information on the fund, you can flick through these tabs here, see all the historical performance and how it's done over the years, and then also what's actually inside the fund. As you can see here, this fund has various different funds inside of it. It's basically Inception. You have funds that cover the UK, the US, the developed world, the emerging markets, and then bond funds too, which are from all over the world as well as the UK too. If we go back to the main page, you'll see some of the key documentation which you can read, and also see that this size fund is £7 billion. If you're enjoying this video so far and want to help this video get seen by more people like you, please do me a huge favour and press the like button and drop me a comment below. It really helps out smaller channels like mine and increases chances of it being sunny this weekend. Okay, maybe not that part, but the rest is true. Back to the funds. So that's the life strategy explained. Simple, one-stop shop style investments that's managed for you, so you never have to touch it and worry about how much percentage of your portfolio is going to be invested into the UK or the US. It's all done for you. Next up, let's take a quick look at target retirement. There will be lots of similarities here, so we don't have to spend too long. Essentially, it's the same idea. It's a managed fund that contains lots of different funds, giving you investments in the whole world. However, the concept with target retirement is that these funds will be adjusted so as you approach retirement. So for example, you choose one of the options. Let's say I'd like to retire in 2050 or close enough to that. I'd then select Target Retirement 2050. As you can see, it's very similar to the Life Strategy Fund that we just looked at. 80% in equities and 20% in bonds. The ongoing costs are slightly higher though at 0.24%, so just be aware of that. But as I approach retirement age, the mix of equity and bonds would change so it was less risky. There would be more use of bonds and less use of equities. The reason for this is that once you're due to retire, you don't really want to have 100% of your portfolio in the stock market, which could drop 20 or 30%, which could set you back a few years. So the idea is that when you have more time to invest in your younger years, you take on more risk for greater reward, and when you're ready to finally tell your boss you're off, you'll be in a much safer investment class of bonds, which help produce a fixed income. Again, like the Life Strategy range, this is for people who want to have a really simple investment portfolio made for them, and it removes all of the headaches and people like me find enjoyable, and that's managing and building my own investments. So hopefully that makes sense. All of this information is easily accessible from their website. Now let's jump over to the other section, building my portfolio. So in this section, we've got 63 results. And don't worry, we aren't going to go through them one by one. I'll keep it brief and nice and simple. If we run through the sections, equities is where you find the mutual funds and ETFs, which invest in specific regions of the world. You'll be able to find everything here from FTSE 100, the S&P 500, and even the whole world and emerging markets. These funds allow you to build your own portfolio and work out how much of your investing that you want to put into each region of the world. Remember that none of us have any idea where the growth is going to come from in the next decade or so. The past decade might have been great for US, for example, but the next decade could be one where places like China, India, and Japan start smashing things out of the park. One of the best things you can do, and something I do myself, is look at how you diversify your portfolio to ensure that you can protect yourself in case you end up putting all of your money into the FTSE 100 and they end up doing really bad for the next 10 years. One thing to note here is that there are some active funds here too, just be aware of that. Active funds are not tracking an index, they're making choices based on the decisions of the fund manager. They will be trying to make more money by doing it this way, but just be aware that beating the market is really, really hard. If we quickly pull up a FTSE 100 fund just for an example, we can see all of the information here, and this one has a total value of £3.7 billion invested in it. Because this fund is sold as an ETF, you can actually invest in this fund outside of the Vanguard platform too. You search for this ticker symbol here, VUKE. Okay, let's move on, otherwise we'll be here all day. Next up, we've got the category of bonds. As I mentioned earlier, bonds are IOUs, effectively loans that you provide to a government or a corporation with a fixed interest amount that they agree to pay you back in return for your hard-earned cash. Vanguard allows you to choose from different ranges of different bond funds, everything from UK bonds known as gilts, you've got US bonds, and even some from the Eurozone as well. If you don't want to figure it out and try and figure out the best place to buy bonds, you might prefer something like a global bond fund. Personally, if I was buying bonds, I'd probably go down that route. And it would then contain a number of bonds from all around the world, allowing you to be well diversified in case there were better returns to be had in certain countries compared to the UK, for example. I won't bother going into too much details in this money market fund. It's really just a place to keep cash and potentially earn a tiny amount of money whilst it sits there. I can't really see why an investor like me or you would probably use that at our stage, so we'll move on. On to multi-asset then. There's just a single type of fund here and 3 different options. Vanguard Sustainable Life Fund is their ESG focused fund with a mix of equity and bonds. So this one's pretty much like the Life Strategy funds that we spoke about just earlier, except there's been a bit more of an active pick in the selection of different stocks. If you didn't already know, ESG stands for environmental, social and governance. And what this means is that companies who have been deemed to have more controversial means of making their money, like those who make weapons or even those who sell tobacco products, will not be inside your portfolio. It's an interesting new area of investing for people who still want to remain relatively passive whilst being conscious that indexing doesn't discriminate where your money gets invested. On the downside, this will cost you more money, so be prepared to pay for your morality and not expect the same returns as a traditional index fund investor. Right, well, that's pretty much everything covered. Once you break down the investments into smaller chunks, you realize that it's not as complicated as it first looks. If you are wanting to try and find a specific fund or region of the world, it's really easy. Just use these filters here on the left side of the screen. For example, let's see if we can find those FTSE 100 funds. We know the region is the UK, so we'll select that. We know we want an index rather than active management, and we also know that we want an equity fund rather than any kind of bonds. So we can filter this down at the top here as well. Great, so now that's left us with 5 funds all covering the UK market. Because we said that we wanted just the FTSE 100, That leaves us with two options here. The only difference is that one is a mutual fund and the other is an ETF. Now, I've done loads of videos explaining what that means in more detail, but I will leave a link in the description below on that one. Pretty simple then. If you want a complete beginner's guide to get started investing or also looking for more details rather than just it at high level, please see my UK beginners investing playlist, which I've made specifically for people starting in 2022. It's got everything you need to know to finally get your money working for you. Anyway, I really hope you've enjoyed the video. Drop me a like if you have, subscribe for more, and as always, happy investing.